Good morning, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. This is the early London morning commentary on the 24th of May, and I'll be covering 4 different types of products: spot gold, crude oil, copper and aluminium, 3 metals and 1 energy product. Let's look at spot gold to start off with. It's interesting in this particular stance because if you apply RSI's, Relative Strength Index, I think you're probably going to see the market going closer to a low area because of the closes and opens being relatively close to each other. Whether this is a support area, I'm not necessarily certain. It seems at this particular point that we may try and back up to the long moving average around 1307 before a further attempt. It seems to be 3 steps down, 2 steps up situation. That action over early May could be seen as a bear flag, in which case you'd be looking somewhere around the 1270 area, which would not be unreasonable since that's the lower time area at the moment. So I think potentially a little bit of a move up to the 50% area, the 1300 area, then maybe, if we're lucky, 1307. But there will be further selling pressure coming in to push lower, and that I really, this support we've got back in November, I don't think can match the overhang which strays from the whole of this year. If you look at the whole of January, I mean, you could actually look at it as a whole double top, in which case 1270 would be a reasonable target to go for on that. Now moving on to crude oil. This is a lovely market. It's moving nicely within this Andrews pitchfork, which we drew back in early April. We've got support at 70.50 area, resistance at 74.20. Now X1 marks the target for a possible bull flag, which is more reasonable as a bull flag now than any time prior to this. We're not that far away from it, and it would look a reasonable chance to go there. So that the middle time is actually above that, so that there's not really that much resistance till we get to that sort of 73.80 area. Above that, we have X. Now X marks a very old target. As you can see, it stretches from 2015, 2016. I've notated it there into the future and forgot about it. And I had to go and look at the chart to find out what it was about. And it relates to a reverse head and shoulders pattern. And that reverse head and shoulders pattern has as its target around about 76.50. So once the 73.80 area is gone, if it still carries on being bullish, then you can have a look at the 76.50 area. On the downside, you've got a hell of a lot of congestion around about 67.30, and that's not necessarily going to go away very, very soon. And moving on to LME Copper. This is the schizophrenic of all markets, and it's gone back to being a very, very messy chart from having cleared it up beforehand. We are moving backwards and forwards, in some cases the whole day, between the long and the medium moving average, the medium being at 69.50, the long being at 68.50. The market is basically sideways with a tinge of bearishness. You'd need closes above, say, 70.50 to convert that away from that move to even sort of the beginnings of bullishness. And 71.50 would be the killer for it. I think at that point you could look at testing the highs of January and late December again. But there's nothing really pushing it in either direction. There are some quite staggering ranges, given the fact there's not very much going on in the sense of we're trapped between 7,000 and 67.50. So the only other factor is a possible bow tie formation. Now bow tie formations, we get 3 moving averages coming in together like a bow tie and then coming out. That usually kicks in between 50 and 20 business days after the actual crossover. And it's a little bit early to say about that, but that's something to maybe watch in the next 3 weeks or so. And the final one, aluminium. This has been the most interesting of all the charts in recent times, but it seems to have died off. We've got a hell of a lot of support. We've got the medium moving average and a long-term middle time of a shift and a 50% Fibonacci level, all roughly between 2200 and 2100. The key one is obviously the 2200 medium moving average. If we get closer below that, we've gone away from being bullish to being neutral. We still actually are looking at it bullish, though we are below the most recent 50% Fibonacci level at 2347. But it's something to watch out for. This market doesn't really want to try too high yet, but it's obvious from the action even yesterday, the sort of almost hanging man pattern, bullish hanging man pattern, that this market doesn't really want to try too far on the downside either. So let's see, slightly bullish, but that medium moving average, watch to see if it gets tested. Good trading.